Okay, right. So guys, let's finish off one more question in partnership, right? So now guys, what I want you to do is, right, go to your tute, right, and please go to question number 6. Okay, right. So now what you have to understand is each question that we take, about 75% to, let's say, 70%, the question is more or less similar to whatever that we have done. Every question there is salary, there is admission or retirement, partners give loan, we have goodwill, right? So like that, in each question that you take, 70% of the question is going to be similar, but there will always be one new thing coming up in each question, right? Question number 6, 90% of the question is already what you have done so far. There is one new thing to learn over here when you come to do T accounts, closing balances, right? So number 1, question number 6, right? Remember, these are the past paper. This is a model question from a leading school, right? So number 1, right, as always, go to the requirement, right? Income statement for the year ended 31st of March 2016, right? Here we have the income statement on the screen, right? And also guys, partners capital account and current account, right? That also we have done, right? So any partnership question, step number 1, you do the timeline. Okay, so the question is asking for 31st of March 2016, therefore I draw my timeline over here. The question ends on 31st of March 2016. Technically, it starts on 1st of April 2015, right? Now, guys, since you have already drawn the format, or since you already have the format with you, right? Under workings, I need you to open up 3 T accounts, right? Data control. Don't copy any of these. Just draw the T account and keep, right? Second account, name it as creditor control, and the last account, please name that as electricity, right? So we have 3 accounts over there, right? Right, so guys, let's start off, right? Number 1, okay, Lahiru and Malit. I hope all can see the screen, guys, over here, right? Okay, so Lahiru and Malit were carrying a partnership sharing profit and losses equally, right? So therefore, please note down in your tute and keep, this is the old ratio, 1:1. Right, the statement of financial position as a 31st of March, right? So guys, in your tute, underline this date and mark this and keep as opening balances, right? So let's quickly copy down these, right? PPE I am not copying down because we are not going to do an SOFP, right? Current assets, now since all these are the opening balances, this has to be our opening inventory, right? So guys, quickly go and copy this one as your opening stock, right? So go to cost of sales, right? So below that I will mark their opening stock, right? So opening stock over here is 200, so let me copy that over here, 200, done. Right, so remember, these are trade receivables, right? So remember, these are trade receivable opening balance. So what I want you to do in your working, I hope you have drawn a T account and kept, so there, can you please mark there 1000. Right, now guys, remember, debtor is an asset, so therefore the assets will always have a debit side brought forward, right? So mark that and keep. Cash, remember guys, we are not doing a cash book, nor are we doing an SOFP, so therefore cash balance is not relevant, right? Capital account opening balances and current account opening balances, I want you to guys go and copy this in your respective account. So remember, all 4 will come on the credit side, right? So go to the current account, mark on the credit side balance brought forward, right? So current account brought forwards are 400 and 300, let's mark that one, right? And guys, capital account also go and mark your brought forward, right? All done. Next one, right? Okay, we have a loan account given by Lahiru. Okay, so Lahiru is an existing partner and he has given us a loan, right? Please keep in mind, put a star and keep, we'll come back to that later, right? Current liabilities, trade payable and accrued electricity, right? This one, guys, I want you to go and mark this as brought forward in your T accounts, right? So let's go to the T accounts over here, right? Creditors is trade payable, they have given me a brought forward of 400, right? I have gone and marked that. Guys, remember, creditor or trade payable is a liability. Liability opening balance will always come on the credit side, okay, right? Then you have electricity brought forward 100, Remember, this is accrued electricity. It's a liability. In accounting, liabilities will come on the credit side, the opening balance. Okay, right. So that part is done. Right, let's start off the question. On 2015, 1st of April, Nadun was admitted to the business. Okay, now remember, point number 1, 2015, 1st of April. Right, let's go to the timeline. Right, okay. Now guys, remember, 1st of April 2015 means the beginning of the financial year. Right, so therefore we are having an admission, a partner is coming in. Right, decide number 1. Partner is coming in on the first day of the financial year. So therefore, he has worked throughout the year. Therefore, he is entitled for salaries, interest on capital, as well as share of profits. Right. So therefore, guys, please go and mark that over here. Right. So we have Lahiru, Malit, and also Nadun. Right. Interest on capital also we have Lahiru, we have Malit, and also we have Nadun. Right, and also guys, share of profit also we will be having Lahiru, Malit, and Nadun. Right, so let's go back to the question paper. Right, so Nadun was admitted on the first day and he contributed 800,000 as capital. Right, now remember point number 1, a partner is investing capital. So obviously you have to go and mark this in your capital account. Right, so guys, go to your capital account. Right, Nadun is investing 800,000 as cash. So please write the details over here, cash, and mark over here 800. Right, that's done. Next one, the goodwill of the partnership is now estimated to be 1.2 million and all regards should be made through the partner's capital account. Right, so guys, nothing is going to change. We have goodwill. Now you understand we have to divide between old ratio and new ratio. You have to always mark that in the capital account. Right, so let's go to our workings over here. Right, so old ratio we have 2 partners, Lahiru as well as Malit. Right, so remember the goodwill as you can see over here is 1.2 million. Right, so you go and mark there 1.2 million. Right, old ratio guys, as you can see on the cursor over here, it's equal. Right, so therefore that into half, which is now going to be 600. Right, and also Malit also will be getting 1200 into half. That is also now going to be 600. Right, then guys, new ratio as we all know now, there are 3 partners, Lahiru, Malit. So yeah, Lahiru, Malit as well as Nadun. Right, so the goodwill guys again doesn't change, it's 1200. Now we need the new ratio. As you can see over here, the new ratio is now 2:2:1. Right, so take that one, 2 divide the whole thing by 5. Right, so that will be right 480. Right, and then we have Malit. He's also 1200 into 2/5, which will now be 480. And finally we also have Nadun, which is 1200 into 1/5, which will now be right 240. Right, so guys, in the last videos I explained how to mark goodwill. Old ratio should always be credit to capital account, new ratio should always be debit to the capital account. Right, so now you go and debit and credit. Okay, right, so go to the capital account. On the credit side, write down their goodwill. That will always be the old ratio. Right, so guys, how much is the old ratio? 600, and over here 600. Likewise, capital account should again be debited, but remember, debit to the new ratio is 480, and also 240. Right, so guys, that part is done. Right, next one, each partner is entitled to a monthly salary of 10,000. Right, now guys, remember salary it's monthly, so you have to convert that into per annum. Whenever you get salary according to the agreement, you do the normal double entry. Right, first go to the appropriation account. Right, So salary over here, it's 10,000 per person and into 12. Over here also that's 10,000 per person into 12. Over here also 10,000 per person and that into 12. Right, so guys, please mark your values over here. The opening stock down, right. Right, so each partner will now be getting 120, 120, 120. So therefore that will now be right. Right, so guys, don't forget the double entry. The moment you mark salary over here, this becomes debit, so therefore current account should now be credit. Right, so you go and mark over there, right, salary 120, 120 and 120. Right, so guys, that part is also all done. Right, interest on capital based on adjusted capital balance. Now guys, in the last video I gave a note saying that adjusted capital balances means they are asking you to see 10% on the capital account carried down. So remember, this you can't do it now. Wait until the end of the question, close the capital account, and on the carried down you have to see the interest same as the last question or the last video what you looked at. Okay, right. Right, profit and losses are shared among 2:1. That is not a problem at all. The business is carried down on Lahiru's building at a monthly rent of 20. Right, now guys, break it to two parts. Right, number one, the monthly rent is 20,000. Now remember, rent is always an expense. Right, so what you do, right, for the go to the income statement, under expenses for the business rent, you go and mark over there. That's 20,000 for a month, and that into 12 will now be 240. But remember, for the business, when they pay rent, it will now be an expense. But this rent is paid to Lahiru. So therefore, obviously for Lahiru, it's now going to be an income. So all partners' income should now be marked in the current account on the credit side. So you have rent. So the rent belongs to Lahiru. So let's mark for him now 240. Right. So always remember, when it's a partner's transaction, check and see in two point of view, business point of view and partner's point of view. For the business, it's an expense, you go and mark it under expenses. For partner, it's an income, you go and mark on the credit side over here, current account. Right, that's done. Right. Okay, now guys, before I go further, right, I hope you have put a star and kept for this transaction. Loan of Lahiru 500. Right. Now when you go through this question over here, it doesn't say anything about Lahiru's loan. Right. So therefore guys, when you started off partnership introduction, we gave a note saying that according to section 24 of 1890, if the agreement does not mention what percentage of interest has to be paid, you have to pay a 5% interest. So therefore, the question is not telling anything about Lahiru's loan interest. So therefore, section 24 says give him a 5% interest, right? So therefore guys, I will do a small working over here. Lahiru's loan, he has given us 500,000. Because the question does not specify an interest, according to section 24, we have to give him a 5% interest. Right, so guys, 5% of that now will be 25. Okay. Right. Okay, now guys, remember, Lahiru has given a loan. The business has to pay an interest of 25. So when business pays interest, it will now be an expense, right? So you go and mark over here, expenses, interest for Lahiru, which is now going to be over here 25. But again, remember, for the business it's an expense, but for Lahiru it will now be an income. So any incomes you go and mark on the current account on the credit side. Loan interest, right, which will now be again for Lahiru 25. Right. Okay, right. Now guys, I am confident that we have covered all the transactions to the capital account. So let's finish off the capital account once and for all and finish off this 10% adjusted balance. Okay, right. So go to the capital account, right, start totaling it up. 1,600, 1,400 and also 800. So again mark it on this side as well. 1600, 1400 and also 800. Right, now guys start taking down your carried downs. Right, use your cal and please get these answers. Right, so for the first person 1120. Right, for the second person will now be 1400 minus 480, which is going to be 920. Right, and then guys for the last person it's now going to be 560. Right, so guys let's finish off this once and for all. Interest on capital is going to be 10% based on adjusted balance. So remember, adjusted balances means what? Based on all your carried downs. Now you have to see a 10% interest on capital. Right, right, so guys go to the appropriation account. Right, right, you have guys here something called interest on capital. So Lahiru's adjusted capital balance is 1120. We are supposed to give him a 10% interest. Right, for Malit his capital was 920, so we are supposed to give him a 10% interest. And also Nadun, it's 560, we are supposed to give him a 10% interest as well. Right, so therefore guys the interest on capital answers will now be 112, 92 and 56. Right, so guys don't forget, when you mark over here, appropriation account becomes debit and current account should be credit. Right, so go and credit here interest on capital. Right, so which will now be 112, 92 and also 56. Right, so guys over here in the agreement they have said about 4 things. All 4 things have now been considered. Right, right guys, last part, a summary of the cash book. So what I want you to do is in your tute, right, go to the cash book. This side please label it as debit, this side please label it as credit. Right, now guys balance brought forward is not necessary for this question. Right, now see debtor. So if again to make you remember, we have a debtors account. Right, now guys see over here in the cash book we have debtor 5000. It's appearing on the debit side of your cash book. So please go to your debtors account, write cash and make this on the credit side 5000. So what happened, in the cash book debtor is 5000 on debit side, therefore in your control account this 5000 should now be on the credit side. Right, Nadun is investing 800. Remember we have already taken care of that over here, this 800 already done. Right, okay, now guys this one creditor, it's 3800 on the credit side of your cash book. So therefore please go to your creditors account, right, and guys please mark cash over here. Right, 3800. So again remember, in your cash book this is coming on the credit side, that's why in the control account this now comes on debit side, simple double entry. Right, rent Lahiru 120. Right, so guys again if you have not forgotten, in the agreement Lahiru is supposed to get a total rent a monthly of 240. So therefore he is supposed to get 240,000 rent, but he is being paid only 120. Right, I also stressed this point in the last video saying that if there is a income according to the agreement, that should always come in the current account credit side over here. But from this income, if anything has been paid, this 120 has been paid, this should simply come on the opposite side. So you again write rent and mark there 120. Right, so guys again one more time, incomes according to the agreement should come on the credit side of the current account. From this, if anything has been paid, then this should come to the debit side of your current account, right? Right. Drawings. Right now guys, there are 3 drawings over here. You know that if there is a drawing, that should come to the current account on the debit sides, right? So guys, start marking that over here. Drawings. Right, so we have 100, right, and also we have 50, right? Then guys, next one, interest on capital, right? So guys, what I want you to do is, if needed in your tute, please mark and keep here rent paid, right? Look at this one guys, over here 3 things, right? Interest on capital, right? Now guys, see, already over here we have marked interest on capital because that is according to the agreement. These are the interest on capital paid. So remember, if it's paid, again it should come in the current account, but now it should come on the opposite side, right? So guys, start, if you want, please mark here and keep interest on capital paid, right? And guys, start copying this to the current account one more time. Interest on capital, right? So let's mark over here 50, 40, and also 30, right? Then guys, one more time, interest on loan, please mark here interest on loan paid. So remember, interest on loan according to the agreement is 25, 10 has been paid. Because this has been paid, you should mark this now on the opposite side. Interest on loan interest on loan, right? So guys, should now be then the amount paid, which is going to be 10. Okay, right, last one, electricity. So if I'm not mistaken, for electricity we do have an account, right? So guys, please go to that account, right? Now see, electricity in the cash book, this 200 is coming on the credit side, so therefore in the electricity account, now this has to be debit, right? Office expenses, remember, for office expenses there is no T account, so therefore this expense value, directly you go and copy this to your income statement, right? So under income statement, I will mark over here, right, office expenses, right, which is now going to be 300, right? Okay, so we have done the 75% of this question. Nothing is new, it's already everything what you have studied, right? Now guys, this is where you have your learning point in this question, right? So in your tute, take a pen or a pencil, please underline this word, net increase in liabilities and current assets for the year ended 31st of March 2016, right? The key word over here is net increase or decrease, right? So remember, if these values are positive, it means it has increased. If the value is negative, it has decreased, right? So how is this different from the things what we have done, right? Number one, I want you to underline this and mark and keep their closing balances, okay? Right. Now see, opening stock is 200. Here they say the closing stock is 100. Now I said you, because it's positive, it has increased or decreased? It has increased by 100. So therefore, so opening stock, I will mark over here and keep purchases, and also closing stock, right? And guys, closing stock is not going to be just 100. Instead, it's going to be 300, right? Again, how did it become 300? Opening stock is 200. During the year, inventories have increased by 100. So if the opening stock is 200 and if the inventory has increased by another 100, it means the closing stock is 300. Why we are doing like that? Because the question said net increase or decrease, right? Let's do trade receivables now, right? Now see, trade receivables, the opening balance is 1000. During the year, it has increased by another 1000, so therefore the carried down, guys, is now going to be simply 2000. Right, look at the next one then, trade payables. The opening balance is 400. During the year, this has increased, net increased by 600, means our carried down is now going to be 600. Right, last one, electricity opening is 100, but during the year this has decreased by 20. So if opening is 100 and if it has decreased by 20, the closing balance is now 80. Right, so guys, if you want to just practice on this particular theory, take out your A-level past paper, go to 2011 paper. So in the 2011 paper also they have tested something like this, where they have given you the opening balance, given you the net increase or decrease, and you have to derive the closing balance. So please check and see that question on that specific area, whether you were able to do this part of the theory. Okay, last one, property, plant and equipment are depreciated at 10%. Right, so guys, let's go to PPE. As you can see, the PPE is 2000 and we are going to depreciate this by 10%. Right, so go to expenses. Right, so guys, under expenses, open up depreciation. Right, so the cost is 2000, see 10% of it, so therefore the depreciation will now be 200. Right, so guys, with that the question is done. Right, now let's finish off our question. Right, so guys, number one, the first thing what you should do is complete these accounts over here. Right, so therefore guys, for debtor, right, 5000, 2000 and 1000. So guys, the missing figure over here should now be, so over here the total is 7000. Right, so therefore the missing figure is now going to be 6000. Right, so this sales of 6000, please go and mark this in your income statement. Right, so sales over here is 6000. Right, now guys, we need our purchase. Go to your creditor control account. Right, so the total over here is 4400. Right, so therefore the missing figure over here is now going to be 4000. Right, so please go and copy this as your purchases. Right, then guys, next one, yeah, electricity. Right, the total over here is now guys going to be now 280, so therefore 280 on this side also. Right, so therefore guys, the missing figure over here is now 180. Right, so you go and mark this also. Right, so electricity guys is an expense, so let's make some room over here. So that will be 180. Right, so guys, now we have all our answers. Right, so number one, let's get our cost of sales first. Right, so guys, cost of sales will now be negative 3900. Right, so therefore our gross profit is now going to be, right, 2100. Right, then guys, please add and take all your expenses given over here. Right, so therefore guys, total expense is now going to be negative 945. Right, deduct gross profit from expenses, you will get your income, sorry, you will get your net profit, which is going to be 1155. Right, then guys, when we add our salary, it's now going to be 360 negative. Right, and also guys our interest on capital, when you add, that will now be right 260. So therefore from the net profit, now please subtract your salary and interest on capital. So that's 1155 minus 360 minus 260, right? So we are left with 535, right? Right, so guys, share of profit. So remember what is left now, 535 should be shared, right? So remember the new ratio, if you can look at your tute, it's 2:2:1. So therefore 2 divided by 5, right? So he also will get the same portion, 535. And then Nadun also will get 535 into 1 over 5, right? Right, so guys, get your share of profits now. So that will be now 214, 214 and also 107, right? So guys, don't forget, share of profit also has a double entry. Here it becomes debit inside the appropriation account. So therefore guys, go to your current account, right? Mark their share of profit. So therefore now it will be 214, 214 and also 107, right? Okay, so guys, with that we're done with the question. On your own, please finish off the current account as well as the capital account. As always, if you have any doubts, please feel free to contact me and clear your doubts over here. Right, so again, learning point of this question is only this: the opening balances were given. On your own, you had to come to the closing balance. So how did we come to the closing balance? To the opening balance, we have added the increase or deducted the decrease to arrive at our closing balance. So guys, that is the only new thing over here. Hope you have understood the question. Feel free to ask any doubts over there.